All right, we are officially live. All right, so just real quick, we're not going to make this very long. There's no sense going on for hours and hours. Let's first check on some of our previous trade setups, and we'll see how they're doing. So here we are in the let's zoom out to like a 4-hour here. We did this butterfly right here, this gorgeous butterfly. And in this particular one, we identified the first 3 legs, and we are potentially here in this 4th leg. And when it broke this structure, it seems to be going really, really well. And again, butterfly, this first retracement, the AB leg of the XA leg, it has to be 786, and nailed it just perfect. The AC, the points between the AC or this retracement of this leg right here, just needs to be between the 382 and the 886. We nailed it, and we nailed it on a fib level as well. And then we're going to project forward the BD leg, and we're going to check out these ratios right here. And if these ratios pair up 1618, 1217, very, very strong. 2618, 1618, which is what we have here. We got 2613. Let me zoom in a little bit so you can kind of see that a little bit better. We have the 2613 and the 1618, and it just happens to project out to a previous low. So here on the lithium Americas core, I think we're doing very, very well. And I potentially am going to be a buyer when this thing bottoms out, and it may take a while, it may take several weeks, but I'm going to be a buy if we come down here to around $12. So that was the butterfly. And then let's look at this was our last video here, and if you remember, this is the bat, and we'll go over quickly the rules of the bat. The XB retracement needs to be the 382 or the 0.5 or somewhere in between. Most of the time it's going to be the 0.5. In no case can you ever have any kind of wicks that take you past 618, not even a momentary wick. This XB is most likely 5.0, which is what we have. The AC needs between the 382 or the 886, obviously. It's better if it's the 382 or the 886. Second best would be if it hit on a Fibonacci level anywhere between those levels, but it really just needs to be between those levels. And we're here at the 0.8822, not exactly a fib level, it's pretty close to 886. If you discount these wicks, could possibly be. And then the BD leg. Again, the BD leg, when I'm calling it leg, it's incorrect to call it a leg. It's the 2 points. It's really it's really the retrace of the BC, the CD. It's really point B, point D needs to be between 1618 or the 2618, and ideally it would hit the 1618 or the 2. So when I see this first retracement hit the 0.5, and I see this projection hit the 0.2, and then the XD has to hit the 0.886, it just hits it. It just hits it real perfect. And then when we were going over this is a bat is typically a deep retracement of the test previous lows, which is what we have here as well. And characteristic of a bat as well is that it typically reverses quickly, and it doesn't. A bat typically doesn't meander like this sideways. Typically, it's usually a quick reversal, which what we hit here. Now this bat has already completed because we hit our take profit here at point B. So technically, this harmonic, if it ended right here and we continued down, this is a completed harmonic because it hit at least one of the targeted take profits. I'm expecting some more upside on this. What else did we go over? We went over the oh yeah, here on copper. So here on the copper, there's a Gartley. Now, the Gartley, whenever you see, and everybody pulls fib retracements, whenever you see a perfect, it has to hit the perfect nailing of the 618. Then automatically just start thinking Gartley. Gartleys are so common. And then the AC should be the 382 or the 886. And then when it should be the 382 or the 886, this AC here. Second best would be if it fell somewhere between those two, but on a fib level, which we have. And then the BD leg, and more importantly, this XD leg. The XD leg, when I have must be written in here, it must be the 786. So the two most important retracements is the 618 and the 786. We nailed both of those perfect. This is a textbook Gartley. We hit all of our take profits. The one we haven't hit yet is the 1618 of the AD leg. Now these are our points here, A, B, C, D, and we're just gonna do a retracement here of the AD leg, and you see where let me move this out of the way, the 1618, and just let me just put it up here on like the 12 hour so we can see it a little bit better. I am hoping to recapture most of this down leg sell-off candle and hit this area, hit this area here, right there, and get a rejection off of that. So I'm actually in a long on this. I just spot bought some of it, and I'll be exiting it when it gets out of here. I can't short this, but I'm sure there's some copper aspects that follow this. I may be looking to short this if I could find an asset or an ETF, or if I could find something to trade that I'm able to short on the exchanges available to me, then I will. But and then so that's the Gartley. And then I was looking over here on the ADA chart. Let me just show you over here on the ADA chart. And we'll go through this really quickly because I think you're getting the handle on these. Let's go to the 2 hour here. And so we had this Gartley here before, and I have it marked out in purple. This purple harmonic wave. And then also on top of this, I found a Cypher, and it's here highlighted in the orange. And let me just make that a little bit bigger so you can read it a little bit better. There we go. So these are the rules on the Cypher. The XA leg, this first downward leg, has to be kind of impulsive in nature. It just can't be a crash. It really needs to have some momentum going down. So we do have a somewhat of a impulse wave here. An impulse wave will be very choppy. Impulse waves are actually kind of hard to draw. If we put this down on like the 34-minute, you could kind of see it a little bit better. Let's go ahead and grab an impulse wave here. Hang on a second. Triple correction, double into the impulse wave. So here's a 1, 2, 3, 4, 5, and let's make that white. So here you got somewhat of an impulse wave. I drew it somewhat sloppily, but you do have a 5-leg impulse wave here. Impulse waves are kind of hard to draw because they also follow Fibonacci rules, and they also have rules onto themselves. But basically, a zigzag would be a 3-point, like ABC. A zigzag would be a 5-point, 1, 2, 3, 4, 5. This first leg has to be choppy. So if this first leg is choppy, that's good news. And then the XB retracement, just first retracement that you could draw, we nailed the 0.5 here for a Cypher for a Cypher, it should be between 382 and 618. And again, I'm going to say it again, the 382 or the 618 or somewhere in between there. Less as perfect would be if it hit on, a Fibonacci level somewhere between the 382 and the 618. Now, this is super important. The C leg, or this retracement, must be, actually, let me change this. I'm going to tell you, you could read it in other places. I'm going to say it has to be, or at least not very far away from, the 127. Other places will tell you other things. I'm going to tell you, don't listen. I'm going to tell you, in order for this to have a high probability rate, you need this leg right here to be the 127. We hit the 118. We could jiggle some of these FOMO candles or some of these wicks. It's very, very good. And then this leg here, when this completes out this leg right here, I'm just gonna scribble it out here. This leg right there, whatever that reads, is not important. So it's not, as far as a Cypher goes, whatever that measures is not very important. But what is important is that if this hits the 127, then the AC and the AC, this AC leg right here, hits the 786. As long as you have these two, the 127 and the 786, and as long as this first leg here is between the 382 and the 618, if not either of those two, hopefully a fib level between those, then you have a Cypher. And then just the fact that we have a Cypher confirming our Gartley, which we also drew using some other points, to me, then this is an obvious reversal coming down. Now, this is a Cypher is kind of easy to trade, because in this case we're taking a short position. We're going to enter it here at the top. Our stop loss is, you set it right at the X, right there. You set it right at the starting position. And then our first take profit is down here on A. So it's one of the easier ones to trade because it usually gives you such a great risk to reward ratio. And then that's the Cypher. And again, just going over one aspect of setting up a trade, the harmonic patterns. Obviously, you don't do these things in a bubble. You need to have them with trading confluences. Make sure that your indicators, check out, I love those MDX indicators. Make sure it goes with your MDX indicators. Actually, let's just check the indicators real quick here. So, yeah. So here we're on the 34-minute. Still plenty of room to come down. Let's see here. On the oscillator 4, the algo 3 is still showing short, but let's go out to some meaningful time frames. Let's go out to the 1 hour time frame here. And let me scoot this up a little bit. I know it's and again, we're not capped out here either. We capped out pretty high. It's yeah. So this is going to be in. I drew this in. We're going to head down like this, and hopefully here on the algo 5 we hit something like this, or rather, because we're going to do a retrace here. Man, apologies. Let me hopefully we do something like this with a lower price, and then we hit some divergence that kind of kicks us out of here. I'm hoping for something like that to happen. So again, you don't do harmonics all on themselves. They're just one leg on a multi-leg stool. And you know, if you have confluence with your TA, if you got confluence with support and resistance level, if you got confluence with your volume profiles, then then a Cypher, it's a little bit rarer, but it does have a super high success rate. And having this one coupled on top of a Gartley, which we went over in a previous video, I really do think we're coming down. So we just hit this retrace here. Let's just see what this retraced to. And we could discount the wicks. It looks like it nailed the 382. That would be really strong for a downward move if it just reversed here off the 382. But it could still come up. I mean, it could come up 618, even the 786. This doesn't become invalidated. You know, it's got a lot of price to go until it becomes invalidated. In fact, I'm going to stay in this trade until it, you know, until it hits this X point, which is the, you know, the 0.27313. And oh, this is 88, by the way. But I think we're heading down. Our take profits are, let me just draw those real quick in here. Your take profits is right here in the A. Actually, let me just go ahead and throw in some price points here. It would be right here on the A point, and then our other take profit would be down here on the C point. So as price comes down and it gets closer to the 0.25, 0.24, I will be looking to start building a short, but I must have like confluence with my MDX indicators and such like that. Make sure that the volume profiles are going. Check what other stonks are doing, especially the big indexes. But ADA, yeah, this if you're not in a trade here yet on ADA, after this retrace would actually be a pretty decent place to get in. So even if you just you know, see even it just came up to there, and then say price got locked up here at C, and you just had you know, you just put the stop loss there. You got like a 1.2, you know, 1.3 to 1, you know, risk to reward ratio. Hopefully these things all pan out, and we'll do some other of the very common trading patterns. Yeah, we'll do some of the more common trading patterns and finish out the series and maybe combo everything into one video. And I wish there was some kind of automatic app that I could run my videos through that take out all the ums and the ahs and the because my videos would be about 2 minutes long if I took out all the stammer and prick. So hey, have a great time in your trades. Good luck in all your trades. Hopefully I see you guys at the tables, and that is all. Thank you very much.